Welcome to EAGTAX and our tax advent calendar, where we will be sharing tax tips and explanations in the lead up to Christmas. For day 20, we will cover the Nil-Rate bans which protect wealth from IHT on death. Yesterday, we discussed the gifts which are considered before assets held at the time of death and the fact they use the Nil-Rate bans in priority. But what are Nil-Rate bans? There are two key bans available: the Nil-Rate band of £325,000 and the residence Nil-Rate band, which is now £175,000. This November's budget included an announcement that these values would remain fixed until at least April 2028. There is also a transfer mechanism where a spouse who predeceased the individual did not use either allowance in its entirety. This might be due to the value of their estate or the fact the majority of the assets were transferred to their spouse, which is exempt in its own right. Where the spouse or civil partner died before the 6th of April 2017, which was prior to the introduction of the residence Nil-Rate band, a deemed residence Nil-Rate band of £100,000 is permitted as a starting point. Where an individual has been unfortunate to have more than one deceased spouse, this claim can be made on multiple individuals. However, it cannot exceed 100% of the Nil-Rate bands. The Nil-Rate band is a fixed value. However, where individuals pass away with an estate of more than £2 million, the residence Nil-Rate band will start to taper, disappearing completely once the estate reaches £2.35 million. One key aspect is that the £2 million value is assessed without claims for any IHT reliefs or exemptions. This might therefore catch out business or agricultural landowners. The residence Nil-Rate band is only available when a home is passed to direct descendants of the deceased, their spouse, or a civil partner. If left via a discretionary trust, it is not available. The individual must have resided at the property at some point during ownership, and where the individual passes away with multiple residences, an election can be made to nominate a property. The property does not necessarily need to be located in the UK, but it does need to be subject to IHT on death. There is also a provision where an individual has downsized to a less valuable property or no property at all. Remember, some military and emergency personnel attract IHT exemptions in certain circumstances. There is also an interesting piece of tax legislation currently in the House of Lords which will look to exempt particular transfers between cohabiting siblings, noting that cohabiting couples are not entitled to any exemption. We hope you found this useful. Please take a look at our website for more information and contact details at eagtax.co.uk.